Hello. So it is a late one, but we are here and welcome back. And we're going to jump right into it. You may have seen lately some headlines floating around the news, or maybe not, because there is a lot happening in the world, especially in the world of crypto. Donald Trump's new executive order now allows 401k retirement accounts to invest in crypto and private equity, which is a huge deal. This is a seismic shift, but what does it really mean for the crypto market? This is a great question, especially for tokens like XRP. And if you haven't heard that, maybe you've heard the rumors on an XRP ETF filing from BlackRock, which is the largest asset manager in the world, pending applications from other farms that are currently live, or even Trump's own moves in the blockchain world like stablecoin laws and launching his own meme token, or even buying massive shares for a company that holds its own stablecoin. Um, Today, we're going to cut through the facts and the rumors and explain the difference between spot ETFs and traditional ETFs and assess whether XRP could be a winner or just another project that's already seen its peak. So, what's allowed and why does it matter? Executive order details. Currently, the order directs the U.S. Labor Department to re-examine IRSA guidance, and IRSA guidance is the federal law that sets minimum standards for most retirement and health plans in the private industry. It also urges regulators like the SEC to update rules so defined contribution plans can include alternative assets like cryptocurrencies. So, what are the potential benefits of all of this? This could be an open door for everyday Americans to assess high risk asset classes, and diversify traditional stocks and bonds. There are some key risks at hand, and experts warn about volatility, lack of liquidity, high fees, and legal exposure for plan managers. But that is where I believe compliant, low fee, deep liquidity assets, this should sound very familiar, uh, like established cryptocurrencies, like I believe XRP, might become very attractive for institutional players. And I think we should consider the ripple effects on the crypto market at whole. Uh, there will be buying pressure, I believe, from 401ks if retirement funds can start allocating to crypto, and that potentially would open the door to billions of dollars in new demand, especially for liquid mainstream tokens like Bitcoin or XRP. I do think it's important to point out currently 28% of American adults own cryptocurrency. And I think this is a huge number considering institutional adoption hasn't even fully begun yet. And whether crypto makes it into these portfolios depends on the availability of approved products, strong custodial, sorry, I couldn't say that, custodial infrastructure, and demand from plan sponsors. And we've already talked about some of this, but Ripple has already acquired Hidden Road, a custody and prime brokerage provider for crypto, and it's positioning itself well for this infrastructure conversation that's at hand. And next, I want to talk about ETFs, but before we dive in, here's why I personally hold XRP. XRP is a native currency of the XRP ledger, a blockchain built for fast, cheap, cross border payments. We're talking about transactions in 3 to 5 seconds that are finalized for fractions of a penny. With the availability or ability to bridge any currency to any other currency. That means it can settle trades, move money globally, and even serve as a liquidity tool for stablecoins, all without relying on a central middleman. Ripple, the company behind much of XRP's adoption push, has been building payment corridors with banks and fintechs for years, and we've covered many of those. They've also made strategic acquisitions like Medico and institutional custody of digital assets and Hidden Road, a prime brokerage firm, to support secure, large scale asset manager movement. So when we talk about 401k inclusion, ETF filings, or new stablecoin laws, these are exactly the kinds of environments XRP is built to operate in, especially when you start considering a token that doesn't just store value, but does so much more. So, I keep talking about ETFs, but what is an ETF or an exchange traded fund? Think of it like a basket that you can buy on a stock market that tracks something, a stock, index, or a commodity, or even crypto. But it doesn't always hold the actual thing. Sometimes it just holds the contracts that mirror the price. Spot ETF, on the other hand, is like taking the same basket idea, but it holds the real thing. A Bitcoin spot ETF owns actual Bitcoin. An XRP spot ETF would own actual XRP. This usually makes the price match the asset more closely, and buyers indirectly own a piece of that stash. A regular ETF might just track the price on paper. A spot ETF owns the actual asset itself. This key difference will have an impact on institutional demand, especially since NASDAQ and two other exchanges have applied to streamline self-approval process for these type of crypto assets, which I think is also huge news. So currently there is a spot ETF speculation and filing for the application going around. First up is BlackRock. They have currently said they have no concrete plans to file for an XRP or Solana spot ETF, and they've confirmed that through newspapers this week. But some analysts, like Nate Gerasi, believe a filing could still come by Q4 of 2025 as SEC decision deadlines approach. Currently, roughly 7 firms, including Grayscale, Franklin Templeton, and 21 Shares, already have pending XRP spot ETF applications in process. Even if BlackRock says we have no plans, history shows that rumors can still move markets. Academic research on financial rumors have found that they can influence price action, shift investor behavior, and even pressure institutions to act, whether or not the rumor turns out to be true. So, in a market as sentiment driven as crypto, the idea of of XRP ETF can sometimes have a short-term impact, almost as strong as an official announcement. So let's see. Trump's broader crypto agenda currently in the United States. If we look at any news source in the world, uh, President Trump's impact on global decisions can be seen instantaneously. And here in the US, we have the Genius Act that passed on July 18th, 2025. It sets the first federal rules for stablecoins requiring one-to-one asset backing audits, and regulatory oversight. Trump's meme coin and also World Liberty Financial News that January 2025, Trump launched his own meme token. And just this week, World Liberty Financial, a Trump affiliated firm, announced a $1.5 billion crypto treasury and a stake in a public company with its own stablecoins. Moves like this can legitimize crypto in the eyes of institutions, regardless of personal politics. Ripple's battle with the SEC is over. U.S. courts confirm that secondary XRP sales are not security transactions. This legal clarity strengthening XRP's case for a spot ETF and makes it a lot easier for institutions to consider using it. Though the regulatory landscape is still evolving even as we speak. Trump's actions, from retirement plan inclusion to stablecoin regulation to high profile personal investments, send a signal. Crypto is no longer a fringe asset in Washington. Combine that with institutional demand looking for regulated products, XRP's legal clarity and real world utility, infrastructure Ripple has already built, and I think you have a market setup where XRP ETF could make sense and provide a product that hasn't been available before ever. But there are risks. There will be a crowded ETF field if these approvals go through, and it could limit the upside for any single coin. 401ks, the adoption of them could funnel more capital into lower volatile assets like Bitcoin rather than XRP. Whether or not XRP spot ETF is approved soon, the combination of legal clarity, institutional grade infrastructure, and a blockchain built for real payments is why I continue to hold XRP. And if history tells us anything, it's that markets are driven by both fundamentals and rumors. Being positioned before the next wave of adoption could make all the difference. Thanks for joining me again today. I hope you've taken something from this. None of this is financial advice. It is just information to give you and for you to make decisions on your own and do your own research. And please like, subscribe, leave a comment, and thanks again. And I will see you tomorrow.